following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And I got to beat my chest a little bit here. We're looking at, if you guys can see this, we're looking at the indices profile heat grid. I'm looking at the globe here, ranked on a weekly basis, our long-term view, cold cap and Bovespa. Remember, we did that article in Bloomberg based on kind of these things portending that crude oil move up. And what Joey said yesterday, we talked about that POC around 34 and some change. We've kind of jumped that hurdle, possibly rolling down the other side of the mountain. This is great. Bodes well for a lot of things. Had a little, volatility yesterday in the S&Ps, and we have these moves up. You've got to kind of pay attention to these inflection points for stopping you out. That 1944-45 area was a big area. But let me go back into crude oil really quick. And that Colombian exchange and the Brazilian exchange was something we paid serious attention to kind of look at that relationship with crude oil, and one helps the other kind of situation. Here's what we spoke about yesterday morning, and we talked about, let's see if we can get a close above 33.46. Excuse me, it was 33.46, not 34.46. And then when we have that happen, you keep playing the odds, guys. And again, on the S&Ps yesterday, we had the close above, we had the retest, had a little bit of a fanfare on the long side in the morning. Then we had that. I got personally stopped out of that below 44. But we're going to talk about that. But it's the same type scenario. We have the close above. We go back and retest. This is the point of control, the most voluminous level. Is my collar straight? Yeah. The most voluminous level in this particular very wide profile on a relative scale. And let's see, we closed above and we came back and retested it this morning, 33.52, 6 cents from that. And we're kind of on the launching pad again, up $1 a barrel. I fully believe something's going on here, and at bare minimum, we're going to be able to hit this 36.28. And, that's not a bad thing for stocks in general. And a couple of those XLE stocks that have showed themselves early, have really been painless to be long. Let's get right into the S&Ps really quick, and let's look at the situation, if you will. We're going to look at the daily. This is that 1944-45 big area, closed above, went back and retested, kind of failed yesterday. Had a little bit of a decent action in the morning that we had talked about launching off of, but again, that's what stops are for. Now we're seemingly back in the game, but let me kind of go to our weekly chart here. Excuse me. Apologize for that. And we always try to figure out, okay, what's the tide of the marketplace in general? In my opinion, if you've been watching the show, it's been really leveraging the long side. I'm going to go into our, excuse me, that's the last time, hopefully. We're going to look at our long-term breadth. And this is, again, you pull up Taz says, it kind of, they're both on the same side of the fence here. We've got some bouncing around action here with the internals and these breadth calculations. Yeah, it might be a hairball. But as we look at this and you look at the internals, I mean, even in these pullbacks, you haven't seen the long-term really change a lot. And therefore, we look at 44, 45. We look at the next step down for support on the long-term, which will be this POC on the weekly, 1918. We reached a low yesterday of 1920, that general neighborhood. And this allows you, in my opinion, and you go into the scanner, you understand what that means. You go into the futures section. And by the way, I'm getting real sick and tired of going back and forth to the futures section to look at the indices or some of the index futures or some of the indexes itself, like the Shanghai having to type that in. So what we're doing, I think this will be out into this week or beginning of next week. We're actually putting our cell structure also on the top of our indices in the heat grid, so you can mouse over, find the inflection points immediately, and also be able to kind of grab a chart off the index also. So yes, hen feathers too, possibly. I go out in the yard every once in a while and just rip a chicken's head off and just go to town. It's like a primal thing. I talked to Nico and Paige about that. They approved of it. So anyway, we're going to have our cell structure on the top of our, which will be just like you see it in the stack here. When you go into the futures section, you'll go into, let's just go into the futures here for the S&Ps, if I can find it. And instead of having to go back to this area, well, we're going to drink some water at break. You can see these inflection points. There's that POC 1918. Here's that 1944, rounded off 1943, 44 actually. And we're showing, we're at the top of the profile here. We've had a decent rally this morning. Here's the level of the market, so to speak. And then you can kind of obviously check out your charts too. But a lot of that information now will be right on. And here's our daily chart on the S&P. We are also pulling in another module from a charting package we wrote before that we will ultimately release. We're just going to pull that chart module into the scanner also. So I think both of these things will be in here that I'm speaking of at least by next week. And I always jump the gun and overpromise and underdeliver. But honestly, I do believe it'll be in the end of the week or the beginning of next week. So when you go into these indices, it's Larry Pesavento's fault if they're not up, by the way. That's just the way we work around here. And so send Larry an email. All hate email goes to Larry. The beneficial, that kind of stuff comes to me. I always remember that. But as you go in here, you'll be able to mouse over, see the cell structures, grab a lot more information off this index grid. Because, again, this is a function of, user responses. So if you guys have any type of suggestions, just send them in. I get emails all the time. We put new instruments in, that people want to see. If there's a consensus, it's awesome, just easy to put them in. So any type of new feature, things that you guys are seeing that, hey, man, it'd be nice to be able to have this in this area, just don't hesitate whatsoever. And anything negative, feel free to send it to Larry Pesavento at his email address. Here we go. All right, let's go back into looking at the S&Ps for a second. And, in a wide profile, I'm going to consider this a relatively wide profile on our weekly, that POC is going to mean something. So you've got that 44, you've got the 18, kind of back at the top of that box on the daily. We're going to talk about the S&Ps a little bit more when we come back, folks. So please join us, and we're probably going to have Joey on again to talk about something near and dear to his heart, commodities, a little bit later in the show.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Thanks for coming back. We're going to have Joey on after this break. I want to finish up a little bit about the S&Ps here. What do you do now? It's always nice to look back in history, and I can be a Monday morning quarterback, a champion Monday morning quarterback. But, what do you do now? We're right in the middle of a fair auction. We got, Super Tuesday. I have no idea how that factors in. God save us. But, this type of, they never make it easy. And Larry will tell you this. So will Steve Rhodes, Basil, the rest of the guys on TFNN. They never make it. There's no free lunch. It just doesn't traipse up and, the guy gets a cheerleader at the end of the movie every time. There's always some, let's get some people out of this trade first. And that's kind of what I feel is happening here on the S&Ps. I feel like we're compressing, and it just doesn't, it feels like, I hate to use the word feel, but the action, it just kind of feels longish. I mean, I don't know how else to say it. And the internals really, Jay, you're right. I'm reading your comments in the den right now. It could be a dead cat bounce. And you know what? Dead cat bounces can be pretty violent. And we could continue to trail down, but with all looking very launching pad-ish, if you will, and a couple of other things going on. The market likes lower rates and, let's keep the party going type scenario. And remember, Shanghai has really kind of disconnected, as Joey was talking about yesterday, or we were both talking about. The S&Ps have weathered a pretty decent, horrendous storm globally, in my opinion, especially with commodities things. And we're basically, not too far in the grand scheme of things off all-time highs. I don't think we're going to have a massive rally here, and the long-term trend is going to continue. I just think we're going to have a little bit more on the upside. And looking at these internals and how they are not really wanting, the short term's the short term. You guys noticed yesterday afternoon, right around lunchtime, we started breaking down on the internals, if you'll see that. And, we're kind of mishmashing around here, but the fact of the matter is the long-term situation, the worm kind of turned on this recently again, and you got to pay attention to that. So, and what does this all mean? The long-term, the intermediate, these are the internals of the S&P 500 in an aggregate manner. And going back to the ETF section, we've always talked about, like, okay, the utilities have been the alternative to these lower rates. And with the notes and the bonds kind of spinning around and possibly being this trading range, not wanting to go down, not necessarily wanting to have deeper discount rates, the utilities have been, these haven't been the Islamic terrorist of the ETF world. They've been pretty strong. I don't have to tell you that, but when you have this kind of rotation going on, you've got to pay attention to this also. So we're gonna look at the utilities, and we're gonna notice that recently we've kind of intermediately gone south here, and I want to pull this chart up and finish my thought here. I kind of disconnected there for a second. As we look at the utilities, these sector rotation type events are things that kind of really cause these long short models to really have these bad days. And when they rotate, if you don't forecast those rotations, if you're kind of doing this pairs trading kind of arbitrage concept where, hey, let's buy the strong stocks and sell the weak stocks and let's be 50% long and 50% short, a lot of times those are the days that these things really have some issues. But when you look at this, I'm looking at the utilities as, okay, rates are going to stay low. That's the feeling. We've got a new profile attempting to appear here on the utilities. And I'm looking at this really as okay, now we've got the long-term sign that we may need to start stepping off the gas pedal. You look at the internals like we just noticed in the heat grid. That's another indicator. But I'm looking at this as, you know what? Let's sit tight with this. Let's wait for these new inflection points, and let's look at that as support, as long as these notes and bonds stay kind of spinning around. Now, you've got some support down here, 45.66 right now on the daily, but those weekly inflection points, if we get that output by Friday's close and then Monday, I think you're going to have something new to play around with this, and these utilities could continue to march forward. Now, these are, again, to some degree, the safety play, and a place to hide when it comes to, trading stocks in general in times like this. So, alternatively, going back to the ETFs here, if I can pull this back up, Joey talked about the materials yesterday, and we're going to take a look at some of these material stocks. One of them in particular, I was actually looking at. I want to pull up Monsanto. Now, this hasn't been the darling of the turnaround world, but in my opinion, you've got better stocks to go long. But you've got a situation here. If we get close to this 89.20 area again, I think this is something to take a look at. It's kind of that time of the year. I'm going to take a look at DuPont also. Actually, what I wanted to do with DuPont is this. Downtrend reversals. Daggone it. Let me get back to my normalcy here. Downtrend reversals. Here we go. I'm hitting the wrong button here. Here we go. Finally. All right. My gosh, Monsanto was on here earlier. I don't know what happened. Let me go back to the materials really quick. I apologize, guys. I'm getting a little mixed up here. Let's take a look at Martin Marietta, MLM. This is another one I was looking at. A lot of these stocks have, kind of come out of the gate and gone pretty far, pretty fast on the materials side. So what you want to do with a lot of these stocks now is just be patient and wait till we come back and find some support. This one in particular, 139.15. So a lot of times, we'll break out, we'll close above, and we'll need to come back and retest for really the powerful trade. So a lot of these material stocks, what I'm trying to say is, it may not be necessary to just pile into them and blindly go long. You might want to wait until some of these inflection points are kind of retested. Now, here's one, LYB. Let's take a look at this one. This is one that, has just kind of gotten going, and we've kind of come back and retested this 80 area. Now, this is one you can pick a battle here on the long side. Let's also go and look at Avery Dennison. This is another one. I like the action on this. I love how it's kind of closed above, come back and retested. This is one kind of in process right now, 65.05. We've also got 65.09 sitting here. I want to see what we're doing pre-market, if we got anything on this. Let's see. Nothing yet. Let's take a look at AVY here. AVY. Here we go. 85.12. Do we have a print? No. All right, so E-signal charts obviously look a little more cool. So we're coming back into that 65 general area on this. Now this is one where I think you got a chance to look at that breakout, but now you've got a decent, powerful situation around 65. We'll be right back, guys. We'll have Joey up.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think we've got Joey again. Joey, you there? Hello?
Hi, everyone. Can you hear me?
Hey, man. Hey, buddy. It's good to hear from you again. Let's pick it back up. What's on your mind today?
Absolutely. Let's make this a regular thing.
Absolutely. What's on your mind today? What were we going to discuss here?
Well, definitely commodities for sure, because we're really at an inflection point in commodities. We talked about oil yesterday, and the same with Aussie, all the commodity currencies, Aussie dollar, Canadian dollar.
Right.
You know, those are those are right. I mean, they've been outperforming oil. I guess maybe taking a cue from copper. Copper's been trying to put in a head and shoulders bottom. And, you know, so despite China actually testing the lows here at 2660 or so, we actually had a very strong close in China. We didn't break below the previous low, so we retested the low and actually closed very strong today. So that's quite a positive sign. And obviously, the week is not over. I'd like to see the week really close strong. You know, for it to really give me some comfort. But you know, so far today's. I think there's a policy meeting coming up as well in China. And
oh God, what does that mean?
You know, so I'm hoping that, you know, they at least don't say anything bad,
right?
Because, you know, the market's at its previous low right now, right? It retested it literally today. It had a successful test and rebounded off of that low. So, you know, so far so good.
Yeah.
Let's hope the rest of the week pans out. But you know, we're sitting at.
Let me ask you a question. Understanding what you just said, and understanding that, you know, they just kind of, I don't know what they do, execute the guy who's the former finance minister over there. I mean, what they ended up doing something to him, getting him out of the way. So now, what
they didn't execute him, but yeah,
really exiled. Maybe that's a better word. But you know, as they are trying to, at least propaganda-wise, kind of like get things back on track, it seems like by kind of getting this guy out of the way, hey, we're correcting things again. You know, what's the chances that they'd actually say something derogatory? I mean, that's kind of zero, isn't it? I mean, in the meetings, so to speak.
Yeah, I think probably something good. I don't think anything worse can come out of it. So, and given, you know, we're retesting the lows, and we're also sitting right at the 200-week moving average for the Shanghai Composite. So we tested that and bounced off of there. The weekly unfair low is at 27.42 on the Shanghai Composite. It closed at 27.33.
Right.
So we have a couple days for it to, you know, close above there. My guess is going into, you know, any type of policy meeting, I'm hoping that they will actually, you know, bid this market up a little bit and we find some kind of a support. If you look at all the commodities, they've not reacted to China's fall this week.
Right.
In fact, it's held up, and oil is actually breaking above that key 33.50 level that we talked about. It's sitting at above 34 now. I still want to see oil close above 34 this week, because we've seen many times over the last few weeks it, you know, peer its head above this and it just gets knocked down like a mole. So, you know, it's happened too many times. I don't even want to try to bet on that anymore. But maybe, you know, that said, that's probably when it actually finally, you know, closes above.
Right.
And when it does, then I'll get in. I think I don't want to be the hero again and just get my head chopped off again.
Right, yeah. I mean, I've said earlier today, I don't know if you were listening, around some 36 and change will be like the targets on that oil trade right now. And now I think stops can be lifted up now that we're kind of up $1 over the POC on the daily now, above 33.62, I think was the number. But I've got, and again, we're trying to put things together always on this show that might lend credence to which way the broad markets might move. I've got the May contract of copper up right now, and this is the weekly, Joey. And like you said, I mean, we're kind of on the precipice of these commodities. I know we're at the top. We're in a downtrend. We're at the top of the box on our long-term weekly. That's kind of in normal cases, that's a chance to sell again. But we reached that top last week, and we're kind of crowding it again. Any type of move up in copper now,
MACD, if you look at MACDs, they've actually finally peered to the positive side, and we haven't cleared this top yet at 215, which I'd still like to see it close above there.
Right.
And you're right. I think if you look at Aussie dollar, it really looked like we had a big, strong move down 2 days, on Friday, and we've been able to kind of rally the Aussie dollar again today. So it hasn't gotten back to the original level yet, but
I really like that trade. I mean, I hate to get over.
I gotta say, so far you're right on that one. I wanted to really short that one because it was, it's been such an outperformer. But I think at some point you gotta say to yourself, okay, there's enough things outperforming, like Brazil, like Colombia, that you you pointed out earlier.
Right.
The Canadian dollar, the Aussie dollar, oil's been popping up today. So oil's been the big laggard, and if oil finally does it, oil's been lagging the XLE, copper, it's lagged, so all of these other things have moved. The commodity currencies, the commodity indices like Brazil and Colombia, so all of these things have moved, and we're just waiting for oil, and even gold has moved, obviously. So we're just kind of sitting there waiting for oil now, and today could be the day.
Yeah, I mean the XLE, the Australian dollar. I mean, the XLE looks like it's literally compressing into a launching pad to me. I mean, can you hang around? We're gonna talk a little bit more when we come back, if that's okay. Okay, cool. All right, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We've got Joey Zhang on from Hong Kong with us. Joey, you still there?
Yep, still here.
Great. You know, I hate to tell you this, but I forgot what we were closing with before we got off you got me off track looking at this European situation.
No, we were talking about XLE and how it's on a launching pad.
Right. I'm going to go back to our server holding the commodities here. Let me go back to that. Here we go. Yeah, I mean, there's a lot of things that have kind of, you know, foretold possibly a crude oil move up. And, you know, you were speaking about the Canadian dollar, and we were talking about, you know, the XLE. We were looking at a couple of other things. So the ruble actually has been something that's been kind of continuing.
Yeah, the ruble is starting to, the dollar ruble is starting to break down, you know, obviously.
Right.
So, you know, that's kind of confirming a lot of things here as well.
Right. Yeah, so here's that XLE. It just continues to make higher lows, and you know, it's just something that really, you know, this is kind of almost that. It's not a real continuation pennant or flag situation, but it's possibly a you know, a compression situation to where we're kind of continuing to edge up into these, you know, the 57, the 58 area, and then, you know, you more than likely will see a pop here, but just keep your stops in on things like that. Can I first ask you a question about the financials? Is there any plays at all involved with this group, or what are you thinking here? Because are they just stuck in the mud because of the rate structure and the flattening of the yield curve, or what are your thoughts here?
Yeah, I mean, I'm really not. That's pretty much the last sector I'm really looking at.
Right.
You know, they're all on kind of weekly support levels. You know, Bank of America, Wells Fargo, Citicorp. You know, even looking at the investment banks, they're kind of sitting near weekly support, weekly unfair lows, and also kind of you know, some are sitting on the 200-week moving averages and stuff. Are
they shorts, or are they just something to stay away from? I mean,
yeah, I don't see any fundamental reason unless we start to see a steepening in the yield curve and stuff like that. But I'm much more focused on commodities, because that's the oversold sector that's led this whole thing down. And it's the first time that if you look at the commodities, they've actually decoupled with China, because China was kind of making or at least testing old lows this week, while none of the commodities or the commodity stocks or the commodity currencies reacted to that at all.
Right.
So that's a very interesting thing for me, and I think sometimes you go, well, who's leading what, right? So sometimes if China actually breaks to new low tomorrow, then I could say, well, maybe China's leading this whole thing, and everything else is going to catch up, right? But
that happens sometimes.
That does happen. So I guess the only thing that we can point to is that there's some policy meetings coming up, and that maybe we don't break to a new low ahead of those policy, ahead of that meeting, and after that meeting, if they don't come out with anything good, then we're gonna head lower again. But I think so far I think we're gonna bet that this week we're gonna still stay on top of that previous low.
Right. I pulled the Aussie dollar back up because I wanted to just point out to everyone that's watching, this has been something that's been kind of in formation for about a year, really. If you notice, a lot of the reasons that I use this navigator down below that you're seeing on the screen right now is for divergence purposes. So I just want to point out also some of the things that Joey just said, and this commodity slant and some things starting to show themselves. We've had a really long-term divergence developing here on our long term. So as we make lower lows in the Aussie dollar, we're kind of doing this dance down below, making higher lows in Navigator. And at some point, we start in concert getting back into this fair auction and possibly busting above 74. We may be crossing the zero line for the first time since the fall of, really.
Yeah.
The fall of 2014,
Yeah. That's right. But that won't be another week or two before we bust through that, depending on how strong the price movement is, obviously.
No doubt. I'm just saying it's something else.
But
it's kind of a little more scarier to be short here than long, for sure. Trying to block out one side of the marketplace, so to speak,
Yeah, we're definitely. I tried shorting this thing; it hadn't worked.
Okay. All right. So it's stay away from the banking sector. Commodities look like we might have a little bit of a run here. Some of these currencies are kind of.
Just back on the commodities, John, I wanted to point out one thing which people haven't really talked about that much, I guess. Just this year in China, or over the last, I guess, 3 to 4 months, we've seen Chinese properties prices in the first-tier cities go up about 20%. Okay.
Good gracious.
10 to 20%. Just in the last few months. Now, one of the main reasons is what I was saying earlier, was that the government has told the banks to just start lending and lend to anybody who wants a loan, basically.
We'll cover it.
So, exactly, just put the rubber stamp on. And so that could be one of the reasons why, I don't know, some of these commodities are starting to perk up a little bit. Today, we actually had a big rally in iron ore in China. Mm-hmm. We hadn't seen that in a long time. So, so I think that's something to look at. It's basically, again, China's central bank creating this liquidity and letting banks lend to. I mean, this reminds me of the GFC in America. So,
that's why I said this a couple of months ago. I was like, how are we to complain about somebody rigging a marketplace?
Exactly.
Yeah.
Exactly. So, they're just copying the Americans at this point. I don't. There's no difference between what the U.S. did and what they're doing right now.
Zero difference.
Yeah, exactly. So, basically, well, they should have learned their lesson, for one, but,
Well, we enabled the globe to think like this, so I guess now we're going to have some, some follow-through, so to speak.
Some
I tell you what.
Follow-through. And,
exactly.
and everybody wants to have the last party, right? You know what I mean?
Oh yeah, and
Like,
and
hey, well,
everybody
why
else.
do they get to have the party and we don't get to have the party?
Exactly.
Right?
And then, as you know, most you kind of traipse around the globe, and you understand that we're usually the trendsetter, and then other economies are
That's
usually years behind before they start enabling those things. Joey, it's been great, man.
Yeah.
Thanks for coming on today.
Okay. All right.
All right, pick it up later. All right, guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show, and it's always great to have Joey on. He's totally 13 hours difference, so what is it, almost 10 o'clock there at night in Hong Kong. And tomorrow people always talk about the A shares, the B shares, the China this, that. I mean, I'd like tomorrow for him to totally give a discussion, if he can, on what does that actually mean, and how does this Hong Kong kind of Shanghai Shenzhen exchange interact with each other, and how does this really, how do you take advantage of it, basically, is the bottom line. So I'd love to get his thoughts on that, so you guys can hear it, because he's right in the middle of all that on a daily basis. I'm showing Apple right now, and the reason I'm pulling it up is because, well, for one thing, It's a very little known stock, and I thought I'd kind of alert you to this company. Actually, the real thing is, again, I get a lot of emails on this. It seems like everybody and their brother trades this stock in the United States, or at least has it in their portfolio. So that breakdown that happened at 125, again, had that big wide profile, going to have some volatility when that happens on long-term weekly. But, a lot of things that are going on now, this is not really having a ton of market relevance on the upside or downside. So I think it's kind of found a possible value down here. And what I'm looking at this now similarly to is, I'm not saying it's going into the world of Microsoft type trading, but we talked, I did a video on this yesterday, talked about the 97.63 lid on this right now. And again, markets kind of rallied quite a bit lately. This is kind of sympathetically edged up. I'm a big fan of trading this in a range right now. The bottom of that range, 93.22, bare minimum. That's the targets. You can orient stops based on your appetite for risk above 97.63 in this. And that's just the way I'm looking at it. I mean, lofty aspirations on this one would be 104 if you're going to try to trade the breakout above 97 and change. And then that's kind of your next wishful thinking on Apple. But again, just I think the worms turned on this thing when we started breaking down initially below that 125. And if you go back in time, I mean, this is, these are kind of writings on the wall when this happens. I mean, you've had this, I don't need to revisit what Apple's done with you guys. I'm sure you're aware of it. But again, that's my thoughts on it moving forward. We want to take a look at one stock that, Joey, we were talking a little bit about the financial sector. This is one, again, I don't see this stock being on sale. I mean, Goldman Sachs, this is one where, that we've had the breakdowns happen that started around 200. Now we're 25% lower than even the breakdown, not from the all-time highs. And right now, this stock, I think you still look at this particular situation coupled with that yield curve problem. There's a lot of issues here with this stock. There's 155 sitting there as big time resistance. And you've also got something, again, the sympathetic move up. You still can't even get through this 151 area. So you've got a chance to short it, make a couple of points, in my opinion, around 151. Then you got 155 staring you in the face after that to try it again. We're trading 150, it looks like pre-market this morning. Is that correct? Yeah. 150.26 right now, first print on that stock. All right, so going back to the initial, we got about 20 seconds left here. Going back to crude oil, just to kind of give a summary here. It looks like we've crossed the top of the mountain, closed above that POC yesterday, first time, good gracious, in a long time. And then we've come back and retested this morning. Stops can be oriented around 33.46. to try to make a good risk reward up to 36.28 on this stock. You got a lot of things pointing in the same direction for this to go north now. Stay tuned for Larry and the rest of the guests on TFNN. We'll pick it back up tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.